Well, good morning. It is the 25th of February, 2026, Central Standard Time. This is Risk Neutral Trading. This is my virtual live trading journal. Now, a little bit different from a typical stream because this is my trading journal. So essentially I am capturing everything that I see on my screens here in the video, and then my narration provides insight as to what I was thinking. Saves me from screen snapping and typing and all that kind of stuff. I'm not very good at multitasking. Just quickly, we're working on a huge gap up here. I guess you know that off of who knows what. The State of the Union was last night, apparently. So, wow, having a sneeze is on here. Stand by. Yeah, so I am not licensed to provide trade or financial advice, nor do I imply that I'm doing so. However, I do trade live. You're on Bookmap, and this is a live funded account through AMP Futures, funded by with my money. So I am trading live real dollars in the market. I only trade structured trade, which I have pre-vetted to have a statistical edge or expectancy, and that's where we are at the moment. So I do trade completely transparently and fully accountable, but not giving trade or financial advice, if you can, get your head around that. So I appreciate the likes and subs. I'm only in this for that. There's no monetization from YouTube. I stream to YouTube to enhance the transparency and the accountability. Also, I can review the stream on any device, which is pretty handy because the streams are 7 hours long. I stream the entire cash market. Again, because of my commitment not to take any trades off the stream. So I have to have the stream ready in case this trade presents itself. At this moment, that's where we are. Let's look at the numbers now. There's really nothing going on. Boy, I'm having This is the investing.com. It is my original news source, and you'll see that there's essentially one crude oil, the Cushing inventory at 930. That's all that's up today in the States. Earnings, however, is huge. We're in the middle of earnings season, nearing the end of earnings season, and today is Nvidia after the bell, so that's going to be a big one. Once again, this is investing.com. It's free. And that's why there's all these ridiculous ads everywhere. But my thinking is to keep all the resources I can free so that anybody that comes through the stream can access them without, financial burden. The thing I like about investing.com is it only reports and deals with traditional economic events, non-farm payrolls, CDs, PMI, housing starts, that kind of thing. And you notice if any of the, if you don't know what the Cushing crude oil inventories are, you notice how the event tile turns to a link when you hover over it. You can click that link and it'll tell you all about it. The other news source that I use is Financial Juice, and it is, stand by one. Wow. It's similar to investing.com in that it's has a calendar feature. It's free. Also, both of them would be tickled to death if you paid them, I'm sure, but I'm not going to do that. And the right side over here is more of a squawk box idea. Now, the thing I like about Financial Juice that differs from investing.com, you notice that the earnings are mixed in with the calendar. And also, if there's some non-traditional economic report or speech or something that could have some impact on the market on our auction, they'll pull it into this calendar. Trump's going to speak, for example, or there's some, politician that's going to say something. So I appreciate that. Pre-market, that's where we're going, isn't it? Well, this is IRT, Investor RT. It's my basic charting package. Here is yesterday's RTH. And here is the overnight. And what have we done? Well, we're working on a real substantial gap up of about 25 handles. I would say, just if you look at this analytically here, here's our open. So what are we? We're close to 100% long inventory overnight. Now, think about it. If you were at a trade here somewhere and you had a lot of profit, what would you do at the open? I'd be looking to take some profit. So I would expect responsive selling to take profit off this long inventory. I think it's just kind of common sense. It's got no factual reason for that, but that's what I think. So just to give you a rundown here, this is the MES, the MNQ, the ES market profile chart, and this is my high definition or my high time frame chart called the micro composite, which is also the MES. One thing about the investing.com charts that you might be helpful. At the header of every chart, the header of every chart is the chart name, which is meaningless to anybody but me. However, the instrument, the periodicity, chart type, and the session. Down here, the micro composite chart, it's a MES daily time frame, and it's the RTH session. And that's just exactly what it is. Now, these are these are daily candlesticks, and wherever price overlaps, I draw this volume profile around them, and that generates a micro composite VPOC. These high and low volume nodes, which are just markers of the lows and the highs on this volume profile. And those high and low volume nodes push automatically to bookmap. So do the session prices. And this is, as I said, the market profile. So let's look at bookmap here. This is my execution platform, basically. First of all, you see Blue Boy over here, which is just a vertical line right there that I put on the first print of each session. And if you don't believe that, there you go. There's the, the overnight, the RTH, the overnight, etc. And it's nothing more than a visual cue for me. When I glance left, if I see this line, I know that I have the entire session in view, which is what I want, because I want to be firmly aware of the context for the current session that we're trading. And, what would you say the context of this overnight is? Is there any question that the context is up? Higher highs, higher lows, up we go. And here we have previous RTH high. And you see that early this morning, I've already put in my gap flag because we're going to obviously open in a big gap up and gap rules. Now, my gap is different than probably a lot, and it is where the high or low of yesterday's RTH session, which is right here, and the open for today's RTH. That will be the gap high. This is the gap low from yesterday. I need to change that actually to 24. And then we have the gap. The gap high will be wherever we open them. So there we go. That's how that works. So let's look at the basic stuff here then. We have the dome, the price ladder, the order book, whatever you want to call that. This is these are resting liquidity. These are limit orders, not trades. Limit orders or liquidity in the book. This is the micro composite column where I enter these values. There's the gap high expected for the day. Yesterday's are there's the naked volume point of control. These are the high and low volume nodes. This is the full session volume profile, which reset last night at 1700 and will continue through 1600 today. Not the overnight. This is the full session or the Globex. This is delta based on the RTH. And this is the RTH volume profile, which will reset this morning at 8:30. Here we have my statistics column, which is real important to me. And I think that it should beat everyone. I'll go through that in a minute. And these are the session prices, which are pushed automatically from IRT here to Bookmap. And I share these with anybody, so if you would like them, let me know. They push continuously from 1700 on Sunday night through 1600 on Friday. So there you go. It's just a CSV link URL from Google Sheets or whatever, Google Drive, whatever it is. The statistics column, the first thing I do is determine the open type for the day. And there's only two parameters or criteria that determine that. If we opened right here, right now, how would that open price compare to the previous RTH close? Well, there's a close way down there. So it's obviously higher, okay? The second is, how would it compare to yesterday's range? We've already determined we're way out of range. So this will be higher, out of range, which, as you might guess, is a gap up. There's only 4 statistical open types. Now, the next thing we'll do, and the reason I changed the title is so when I look at a screen snap or the stream, I can instantly know the relationship for the open between the overnight. Next thing we do is clear the notes because the old statistics from yesterday are no longer valid. So we're going to get new ones here for today with these associated price levels. Now we'll do that in a second, but notice that there's no indicators on my book map or my IRT. There are only price levels, statistics, probabilities, basically volume. POC for the full session and the RTH. RTH is a little more bright yellow than the full session. POC being nothing more complicated than the price at which the most contracts have traded so far in the session. So far in the overnight, we've traded 3,703 contracts at 12.5. The minute one of these prices is 3,704 contracts, this yellow line is going to move there. The POC will move there. It's just that simple. There's an RTH or a Globex and an RTH VWAP, volume weighted average price, and there's a mid for the RTH. Then the rest of these are just price levels, straight up. You know, common sense, close, POC, value area high, previous high, developing value area high, overnight high. That's all there is to it. So let's look at the statistics then and figure out where they come from. Well, they come from this study in IRT right here. And here was yesterday. Like I said, there's only 4. Higher out of range, higher in range, lower in range, lower out of range. Gap up, gap down. We're going to be gap up. real simple how this works, as with everything I do here in trading. The study looks back at 1,683 the most recent 1,683 trading days. Of those days, we opened higher out of range 419 times. And of the days where we opened higher out of range, the overnight volume point of control was revisited 77.6 times. Overnight volume point of control, 77.6. Boom. And I'll be right back. Sorry about that. Okay, where was I? So that's how the statistics work. And now we're just going to go down the list here, but I'm going to curtail this a little bit because of the delay. Overnight high is 74.9. And these are not hard, fast lines in the sand or guaranteed targets. You know, if you don't understand probability or percentages, I really recommend you Google that or look it up, or be sure you've got a handle on that. 66.8 for the mid, which I think is probably right there. No, that's settlement. Ooh. Okay. Previous close, that's got to be around here somewhere. Previous high, IB high, IB low, previous close, 49.4. Now, it should be real important that you understand these are just overnight low. Where'd that go? 49.3. That's amazing, huh? These are just probabilities, and they can change because it's a dynamic market, isn't it? The overnight mid is right here under the VWAP. You see this line, this flag? So I'm going to put that in there because that's one of the, usually the second highest. And it's 66.8. All right. So the next thing I'm going to do here quickly is something I do every day. Kind of disrupts the day, but I'm going to do it anyway. And that's the TLab snap. And that is something, as I said, I do every day at about 8:20. And this is why I don't multitask well. So, bear with me here. Okay, there we go. The TLab is a bookmap Discord chat room called the Traders Lab. And every day at about 6, I post the reports, just a screen snap for the reports. And I post this every day at about 8:20 to give anybody in there opportunity for these numbers that doesn't have the same kind of charting capability that I'm fortunate to have here with IRT. Now, the TLab was started by a guy named Tom B., who's a professional trader with 46 years experience and very successful. And I have absolutely no proof of that other than what he says. And I'm being honest here, right? Because I think that's important. However, I've been associated in and around the TLab for a number of years, and I believe he's telling the truth. Has he ever shown his account? No. He doesn't trade live, nor does he call trades. So if push came to shove, I have no proof of that. I want to be real honest about that. I think that's important. I trade completely transparently, win, lose, or draw. Everything I do is right here on the stream, visible for all the world to see. And so in my case, there's no question that I'm trading a live account and how I trade and win, lose, or draw, right? But I do think that Tom has a lot of good things to say. I was a pretty active participant there until I started the stream, which essentially was a suggestion from Tom, because he continually says, only trade vetted trades, narrate the market yourself, and focus on your trades, which in my world means focus on what I'm doing and not, yucking it up in some Discord place. So that's what I've got to say about the TLab. I recommend, it's the only other site that I ever tip my hat to or recommend in any way. I certainly don't recommend any of the other bookmap Discord sites because I haven't been to them. And use caution. The two other sites that I did go to were exactly like you would expect. The third word out of the guy's mouth was trying to sell you something. You're never solicited for anything in the TLab that I know of. So I tip my hat to Tom and the TLab guys every day. And there's a lot of good people in there. And it's pretty, another thing I would say, most of the time it's pretty adult, not like romper room. And, it's gotten kind of, there seems to be, it's like every chat room, I guess, there's a constant flow of new people through there. And, people who are really enamored with the sound of their own voice. So they want to post a lot. Anyhow, let's get back to the point at hand here. So we're looking to open gap up. I would expect responsive selling to take some profit. Very definitely remember that we are in gap rules. Gap rules say, essentially, if we open in a gap, and if the market closes the gap relatively early in the session and is accepted within the previous range, there's a high probability we'll trade across that value area to the opposite side. If we don't, common sense, if we're not accepted, what is likely to happen? Well, we're likely to reverse, to trade off in the direction of the gap. It's not rocket science. It's just common sense. It's like everything else in the market. The market can only go up or down. It's binary. Well, if it doesn't go down, what's the what's the alternative? Up, right? So there you go. Now this is School Run Wednesday, so I'll be dusting off out of here at the top of the hour, and there's no reports today. The market is still licking its wounds, I guess, after the. I have no interest in following along with the State of the Union because I don't. I'm not. Yeah. Anyway. So there we go. Let's see what else can we do now. Well, I know something that's pretty important. Probably you might agree with. It's pretty important to be able to trade, is it not? So on Bookmap, the way that you can activate and trade with the application is to activate the trade control panel by clicking that padlock. Select a method that you will use to interact with the application and trade with your mouse. If you choose chart, the only place you can trade with your mouse is the active data column. If you choose DOM, the only place you can trade with your mouse are the DOM columns, and both is, as you might guess, both of them. The next thing that's important for me to do are confirm that the journal, which just automatically turns itself on. This was shut off very definitely, and now it's back on again. So be real careful of that if you don't want this being pushed somewhere, and select the journal that you want to have your stats go to. I don't even know how to get there, to be honest with you, but there you go. I also choose multi-brackets, which is real important to me. This is where the risk-neutral methodology is enabled. We're going to open in 3 minutes, so I'll try to speed this up. The minimum risk-neutral package is a 2-lot. The next thing you need to decide is the stop loss for the package, and now is not the time to be determining this. You should have figured this out long ago, during your homework period. The first criteria, in my opinion, is your account risk parameters, risk tolerance. So, assuming that has been determined, that the first take profit target is automatic. It's for half of the package, and it is for the same number of ticks positively as the stop is negative. And then there's a runner. You can choose however you want to set those up. Also, you can choose, if you choose to, you can use Execution Pro, which will do, trailing stops or trail to break even or whatever you want to do. I'm going to leave it as it is. I have selected the 2-lot. I know that's correct. I have all my metrics up here. I don't need, as they're reflected here, I don't need those other tools in the trade control panel, so I can click that button again, get the real estate back. I have all my metrics up here. I have cancel and I have close. Close and cancel. Ready to trade when the market opens in a minute and a half. Not that that's what's going to happen, but we will be ready to, should we do that. Now I haven't set up my opening range trade thing yet. Let's do that quickly. Why is that over there? I don't know. A trading system. Let's see what the opening range does. Let's close that. Let's go over here. I don't know how I even have it set up, but let's push it to the chart. Now, what's going to happen here is this system will be working on the active data. It will be graphed over here. Oh, it will be graphed over here. I'm sorry. And this is within the simulated environment within IRT intentionally. I'm not confident enough in my ability to do this, set up these rules and code this system to have it trade live my account. So we're just going to see what happens over here. And we're going to open in about 10 seconds. So let's get back to the mission at hand here. Let's see if the volume profiles reset as they're supposed to. I'm not sure if I mentioned the delta column here. I'm still not sure how I feel about that. Well, there was the open, and now we've reset. So I'm going to say, okay. There seems to be a difference in time between this computer and the world, and I don't know why. I have the time synchronized to rhythmic every 2 minutes, which you can set up. We have opened properly, so that's a good thing. Next thing I'm going to do over here is change the charting from full session to the RTH. So now this is yesterday's RTH, and here's our open. Gap open. Remember, gap rules. Get those things up to date. And the reason I do this is to ensure that the relationship between session price levels remains as expected. And I'll explain that cryptic statement here in a minute, as soon as I don't multitask well. I said that in the beginning, and that's why I'm focusing on one thing at a time here. And I suppose if I quit telling myself that, I would multitask well, but you know what I mean? Okay. By the way, I'm not sure that I got to this part either, but this is the same chart configuration for the minis as it is the micros. And I'm going to get rid of the IRT chart because it is a giant piggeroony. The stats we know. I think they'll probably be okay. We've opened. It hasn't updated. This is not good. Supposed to be doing that. I've screwed it up somehow. There's our open type. You notice how there's some of these are blue and most of the text is black. Well, that means we've already, whenever we have achieved a statistic level, it changes the text from black to blue. So we've achieved the overnight high so far. I've tried to change a lot of these things around, the updates, so that I lighten the load on the system. Well, overnight, there's the RTH VPOC. There's the overnight high. By golly, we did take that out. You see there? There's a high, and the low is right down here into the open, just below it. Oh, there we go. Gap rules. Okay, gap rules, as I said, if we close the gap early in the session. Hey, Antonio, buen dia. If we close the gap early in the session and are accepted in value or range, high probability we'll trade across it. And that's about the most vague. That's a typical vague trading statement, that can be interpreted any which way you want to. And that's really frustrating to me, the way it happens so frequently. Most of the tradeisms or the truisms of trading are that way. And I suppose people did that on purpose so that they could never be pinned down to anything. I try not to be that way, but what are you going to do? I didn't listen to I would never listen to the State of the Union address, especially under these circumstances. Apparently, it's the longest one in history and just complete fantasy, I've solved this many wars, and the economy's at a century. It's just, wow, it's really incredible how how different things are now. And remember, this is School Run Wednesday. So at 9 o'clock, I'm going to be dusting off out of here for about an hour to take sweet little Tam to college. Okay, here we are. We haven't closed the gap or even looked like we're hinting at it. Here's our IB high, our IB low. Remember, they are nothing more than the high and the low of the first 1 hour of the RTH trading session. That's it. And the name comes from the old market profile days of initial balance. It's okay. Again, let's take something simple and make it cryptic so we sound important, I guess. Who decided the first 1 hour is the initial balance? You know, the initial balance ought to be when the market is balanced, I would think. A level that I would like to be able to pinpoint is the opening swing. Murad Askar, FT71, used to have an idea about how to pin those down. I have to think about that. I don't remember anymore. Back in the Trader Byte days, if you know that stuff. And we're going to expand that IB high up. It looks like no reason whatsoever for the economy to be, euphoric, other than they want to get as many people along as they can so they can just clobber them. It's just kind of the way it works is, manufactured liquidity. If the higher time frame has business to do, they can't, if you have 20,000 or 100,000 contracts you need to buy, and you go in and slop that order in here, what's going to happen? If you want to buy them, the price is going to go zooming up. If you want to sell them, the price is going to fall out of bed. So what do? You get everybody on their back foot one way or the other, and then you're able to put that order in and pick up all that liquidity from those retail people. That's the way it works, boys and girls. Now, understanding that and making money from it, two different things. Two different things, and definitely. And I want to point out that here is today's open so far. Opening range is 20 handles on a 5-minute. So did I get all this right? Yep. Okay, what's going on over here on the mini tab? Okay. Oh boy, look at me go. Got it all figured out. Maybe not. Well, as I said before, I'm looking for some responsive selling to take profit, which would also mean staring down that gap. So let's see what the hell happens. Oh, I tell you something I didn't do. Oh, blue boy, my top secret proprietary indicator here, the vertical line. Slop that on the open. Now, again, as in the pre-market, nothing more specific or important than the opening print. But when I glance left and I can see Blue Boy over here, I know that the entire session is in view. So I can, because I've got Blue Boy on one side and I've got the active market on the other, and I can keep track of context. That's the reason for it. And I'm going to disable the trade control panel at this point because I'm not trading. And I don't want to have any potential surprises. You know, when the cat comes in here and just mosey around on the keyboard or whatever else. And I think Lucky would do that. Panda would never do that to me, of course, because she's a sweetheart. But Lucky's mischievous. He'd think it was pretty funny. So I'm going to keep that as it is. All right, so we're open. Gap up. No indication of interest in closing that gap at this point. We've extended the IB high up a couple of times. Our range is now at about 12.5 handles, so that's pretty wide. And this is CS and MES have been trading like the NASDAQ lately, you know, 100-point swings and ranges, and Jesus, crazy. Yeah. There we are. Big gap up. I mean, big gap up, a long way from the all-time high, but a gap up. Here's our micro composite VPOC at the 80s. No lags. That's a good thing. I'm happy about that. Woke up this morning and my mouse didn't work. I went so far as to try to delay or try to prevent any kind of delays or hiccups with the mouse, and I bought a wired mouse. How long ago was it that you used one of those? And I've been using it for a few months now, and all of a sudden this morning I got up and it's dead as Kelsey's nuts. But fortunately, my other machines in here in the office use an MX25, and I was able to just throw the dongle over here and see what happens later today. I'll restart everything at the session crossover tonight. Always something, huh? No matter how you prepare for, you know, I try to be real, you know, redundant and backed up and UPS'd and all that BS. Always something. And of course, you know, first thing in the morning when you're all groggy and the groggy doggy and everything, and then, you know, wait a minute, why don't I see a little guy moving around over here? Crazy. Well, as I, you know, gap rules, okay, we have not yet tried to close that gap, and we're trading higher. So are they going to do if they don't close it, trade in the direction of the gap? Who knows? Maybe. So far, that's what they're going to do. And again, it's one of those real vague marketisms. You know, what is relatively early in the market? What is, you know, all those things. Well, they punched it out a little bit right just ahead of the, right on the 45, I guess. Right on the 15-minute opening range. So they got everybody going that way. If for anybody who's looking at a 15-minute, don't put any stock in these opening range trades, but I see so many of these YouTube people touting how fantastic they are that I have started to build just a quick methodology here or trading system that can test all of their various approaches to the opening range trade and then back test them to see for myself if it's really valid or not. That's the only way I know how to do this. So much for the responsive buying so far. Ooh. All right, 5 minutes to the hour. I'm going to have to start getting my proverbial shit together here about getting Tam going and off to school. So let me see if I can find my Levi's. Welcome to the stream, by the way. Risk neutral trading. It is my virtual trading journal. By no means is this meant to be a my way or the highway. This is what I'm doing now with full transparency and accountability, and any positive suggestion is more than welcome. So, throw it in the chat and I'll be on it like a dog on a bone. And again, today is a school run, Mondays and Wednesdays now. What are we doing here? Well, we're still gapping up. Micro composite, gap up above 3 days ago's high. Long way from the all-time high, but Now, unless they bring it down and close this gap, this will be the beginning of, or the potential beginning of, a new micro composite, because by definition, wherever price overlaps, I continue to draw the volume profile around it, generating a micro composite VPOC in these high and low volume nodes, which push automatically to bookmap. The POC I do manually. And this, of course, would not be overlapping. So Typically, I don't do the first day. I wait for the day after. In other words, tomorrow, and see what happens to this thing, if it's an island top or whatever else. Just thinking out loud here. No reports today. Remember, huge impact on the market will be Nvidia earnings after the bell today. So. I'm real disappointed about my vetted trade, which is the initial balance trades. That's why I'm not, foaming at the mouth about trying to get into something here. I only trade vetted trades, which I have previously identified to have a positive edge. Those were, until recently, the initial balance trades, but the consecutive stops in a row have exceeded the expected parameters from the back test. So I'm scratching my head. I think it's got to do with volatility. And that's a real possibility, But it's pretty disappointing. That's for sure. Now we are essentially through with the so this is taken along right here on the opening range breakout. Again, this is simulated environment, not going any place except in IRT to test this out. But this would have been a opening range, which is essentially a breakout trade. Man, whatever. It's just something I've been testing out, as I said, to try to ferret out whether in fact all this. And let me start over. If you look at YouTube, or you doom scroll on YouTube at any point, you'll notice that there's 197 gazillion opening range breakout is the best thing. Oh boy, you'll never have to trade again. 95% win rate. Blah 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 blah. Well, my anticipation or my understanding of those kinds of postings by the usual suspects has always been that it's just about every 3 months they do that with something that's easily identifiable. There's an opening range every day, so it's easy to go back and cherry pick results. And the idea is to farm more newbie subscribers, because most of those people make their money off subs and advertising with YouTube. But on the other hand, I also want to verify whether those things have validity or not. So the only way I know to do that is to code up the basic parameters that many of them use that can be changed, and I can change them over here with it like this. And then backtest them to see if they really have verifiable results or not. That's the only way I know to approach it. Certainly not hearsay. That's why you see this opening range stuff. And what I'm going to do now is getting into, I got to get going here. Hold on a second. I'm going to shut this down. I'm going to take this off of here because I don't want it running here. Boo, delete. There we go. I don't want it over here either, is it? No. Okay. Let's be sure of that. Nobody home. Okay. And the next order of business would be the initial balance trade, which here we are. So I'm going to now add the initial balance trade because I'll be gone when the initial balance becomes a thing, which is 9:30 this morning. Okay. Come on. There you go. Now. Oop. See what we've got set up for this. 12, 24, 12, 0. Okie dokie. And I'll send this to the chart, which means that after 9:30, if those rules happen, this thing will start trading them. And they'll be graphed here only within the simulated environment. All right, I've got to dust off for the school run, so hook in, hang on, and good luck. I forgot to kick on the music here now. Remember, there's no reports essentially until 9:30, which is the Cushing crude inventory. So if we're trading crude oil, that's a big deal. Otherwise, it's not. But be absolutely vigilant about the inventories. I bet money Okay, back in the saddle, and what is going on? Let's have a look-see around here. Looks like we got an A and a B and no trigger over here. That's gonna look into this. I very definitely have a element in my trade plan to never walk into the office cold and grab the mouse. So gonna get up to speed here a bit, and just keep with it. the IB failure really is a mean reversion trade, you know, with its name associated to the initial numbers. So. Is this the place for a mean reversion trade? Just throw one on there and YOLO a Hail Mary? I don't know what YOLO stands for, actually. Hail Mary is what we used to call them. The old-fashioned Hail Mary pass. I know what a YOLO is. Break out the machine. one problem with this strategy in this market environment that I've noticed. For example, we haven't gotten to a trigger yet, but they usually give us earlier. So if we pull into the trigger zone, they would essentially signal a long trade. General consensus is if you've taken the time and effort to vet a specific strategy, have the statistics to support that, anytime you would introduce discretion, you have just wasted all your time. You see that right here, this could have been construed as a target, as a trigger at 49 and 52. We haven't be scratched. Now the system didn't take the trade because of the volume average. Well, the next question is, let's do this. As far as this average, I want to make sure that this average is being calculated based on how I have it in the main. Remember that this chart only shows reference for me to try to understand that things are happening where and how I think they should. It's all based on the rules of the system. Do I think takes longer than I would like I'm going to say no, and I want to. I'm going to make a conscious decision to my discretion and not take that trade. We'll see how much I lose that. It's looking kind of rare. previously, until I had exceeded the consecutive stops in a row number provided, counted for in the back testing, we're going to go automatic because that's really the correct approach. And now, and I haven't figured out what to do about that. Could be randomness, whether it's ATR, whether it's something with the market, something with the instrument. Until I do that, I'm not putting risk. go along. I'm not saying I foresaw that or had any kind of a premonition or knew something secret that nobody else knew, but you know, there's a long, there's T1 scratch, and there's the stop. I don't know why the volume got up so loud on that music. Sorry about that, if that was... I just noticed that on OBS. It doesn't reflect it in the mixer. Boo hiss boo. So, welcome to my virtual trading journal. And my business here is to approach trading as a business, not a video game. So, my first tenet is to preserve my account. And the only way I know to do that, or the basic way to do that, is risk management. I don't take arbitrary trades that have not been statistically verified or, set up. And that's where we are. Doesn't make for very exciting streaming, but it is consistent and disciplined pretty much. Now, this was a signaled initial balance trade long. Right there is scratch. That's T1. And then here was this big plummet down here for T2. And now we're back over here. What that was, who knows? My guess is news. Or just, they got everybody the way they wanted them and then hammered them. That also happens. This guy, this Zuckerberg, what an opportunistic suck up. And today's big event is going to be the Nvidia earnings at the 15:20. All right, I'll be right back. Well, I think I got the microphone story fixed here. Let's check. Seems like so. Yeah, working on the head. And that wasn't fixed, but it was just settings. I don't know how they got changed. But anyway, yeah, power hour in seconds. The only play of the day that I could have involved in was the IB high continuation. Let's look at that. So here were there's the original continuation stopped out. The second one here, and no trigger. So no signal trade. And I'm really going to stand down on this, trading this system until I can get some sort of a handle on the what's changed dramatically, you know. Talk about that here in a minute. So anyway, no really signaled, as I said, hold on 1 minute. The only signaled trade all day taken by the system was here, scratch with this random outlier here, whatever that was about. Then we had another A and a B and no trigger, so no signal trades. And don't really know what to do with this thing at this point. But anyway, the way I approach this is from a point of view that the market is essentially random. The outcome of the next trade is 50-50. Predicting where the market's going to go is not a good thing to do, or doesn't have a lot of success. So you need to, I believe, I need to identify patterns that happen frequently and the criteria to justify an entry, then capture that data, a large enough sample set to be statistically significant, and to backtest it. Does it have an edge? Does it not have an edge? So that's what I'm about, and that's what the purpose of the stream basically is, to chronicle that journey, because this is my virtual trading journal. So, that's part of what I'm doing. The trades that I have, the reason for my thinking that way, it's not some epiphany that I came up with. It's from, I guess I should say, it's the methodology that the most profitable traders and hedge fund managers in history have realized was the correct way to approach the markets. And I'm talking about Jim Simmons and Tom Sosnoff, and Paul Tudor Jones, and those kind of guys, down to the level of us, like Tom and Rod and guys like that, who are also very successful, but not on that same scale, of course, not billions of dollars successful, but not on that same level. So I think it's the right way. I think it's the right plan, and it's also the business model of the gaming industry from the point of view of a casino. And it's basically real simple. You identify a pattern or a setup with rules that produce an edge, percentage, and expectancy, and then you take that every time it presents itself, and you lean on the law of large numbers to manifest to your account. So that's what I've done over here. I identify the initial balance trades because there's two of them associated with each, IB high and IB low. And these are the rules that validate that. This chart is just a visual aid. These lines are just custom indicators I created so that I can see they do accurately represent exactly where the rules would be. But this way I can just visually identify what's going on, that it's happening when and where I think it should. As I said, today, there was one trade taken, T1, scratch. So risk neutral, and then scratched. Second signal for continuation, but no trigger. And yeah, it would have been nice. So these rules are basically this is some housekeeping. These are the actual rules and associated handling of these flags that are signal markers that I'm trying to get to work right that don't. It's kind of immaterial, but that's what they're for. And then this is the trade management piece down here. And it is essentially real simple. There's 3 rules. There's an A, a B, and a trigger. So A, or the first rule, is the initial balance statistic. B can be either the continuation zone or the pullback zone. And a trigger would be to re-enter this trigger area or zone. At that case, for example, had this come here or this come here, it would have been a trigger for a long IB continuation. If it happens down here, then up, it's a short mean reversion. So that's real basic and real simple, and only 3 rules. I think it's where I've been struggling is trying to get some sort of context filters. In other words, look at the context of the day. You know, is there any doubt in your mind what the context is? It's up, right? Why would I want to short? I wouldn't, because I don't think counter trend or counter context is the way to trade. Now, that may be wrong, but that's the way I'm thinking at this moment. So there we are. The way this works as far as backtesting goes then is these are the rules. And it's real important to understand that these rules and this system don't have anything to do with this chart, other than this chart can visually identify the rules and the result of the rules. But they're not connected, other than send to the chart means that it sends the outcome over here. So the way this is back tested then is to decide how many days, set up the instrument, the contracts, the session, etc., how many days you want to back test it, and then you run the back test. Now, the reason I realized I had to use some kind of a programmatic backtest engine and system. Imagine if you want to backtest 500 days worth of data, and you have 3 rules, and they're specific. You know, A opens lower than the IB and closes higher. The bar previous to it opens below the close. Well, those are specific. This has to be within this zone. It's not, well, it's close or it's maybe or any of those things that would be human nature, right? Imagine you're going to do that over every 1 minute candle going back 500 days in trading sessions. That's roughly 225,000 candles. I just know from experience. Impossible for me to do and do accurately, so that I would have a statistically significant data set. So anyway, here we are. The rules, the back test. Let's do this in 500 days. And let's back test it. And there we have it. Took 9 seconds. And the computer simply validates each and every rule exactly over every 1 minute candle. No discretion, no maybe this, well, okay, close to that. None of that stuff. Exactly as it's written. If you don't want it written that way, then you got to change it. I'll talk about that in a minute. Took 9 seconds to evaluate 498 days, 223,522 bars, 1 minute candles. There is $185 favorable excursion, $45 negative excursion or adverse excursion. Capital required was $2,000. There's 727 trades, 371 long, 356 short. Here's a report that I lean on pretty much, quite a bit. There's 443 winning trades. Average winners 33.39. There's 141 losers. Average losers 12.82. Because it's scale. I can tell you why that is. It's trailing up to break even after 12 ticks. There are 29 consecutive winners in a row and 5 consecutive stops. Full stops, not break even, full stops. And if you want to be real granular, as you should be, this is a report of every trade, all 727 of them. Exact time, entry type, exit types, and levels, prices, and profit or loss or running total. Not running total, but for each one of them. Now, don't see any T1 and T2s here, which there's a T1, there's a long, and then a T1, a T2 total trade, which would be $75 or 60 points. That's correct. So with that kind of data, you can determine whether you really have an edge or not, and then you lean on that. Now, I take a different step, which is to go here, and I've created this, whatever you call it, workbook or whatever. Each one of these lines is a back test. Each one. This is just for the MES, the micros. There's a whole other section that's filtered up here for the ES. And I try to do these frequently, like every night, every couple of nights, to see how I can better refine this. This is not curve fitting. This is to refine this to a total market. These are 498 days, 726 trades, 441, 31. Similar stats. Gives you the win rate, the loss rate, the expectancy, the R factor, the R multiple, profit factor, consecutive wins and losses, trades per day, total long, total short, profit, commissions, net. With that information, you have, I believe, you have a system to lean on. And I've been trading this system now since November, was doing really well. All of a sudden it started going pear-shaped. And the reason, but you have to be patient, and you have to be sure that, let me show you this value here. Consecutive winners, consecutive stops or losses, right? Well, at the point I was here, until you have achieved this number of consecutive stops or more, there's nothing wrong with the system. So you don't make any changes. Now, I reached this point and I went up, 30% more to be sure. And so now I've not quit, but now I'm reviewing what I can do, what has changed in the system. And that's how I believe you approach this systematically. Same way with moving up and scaling up from micros to minis. It's systematic and it's without thinking. Based on a risk neutral 2-lot package for the micro and the mini, I will trade micros until the ticks profit reaches 1.33 times the full mini stop, a full mini 2-lot risk neutral trade stop, and then it would scale up. Just that simple. No discretion or wishing or hoping involved. So that's how I go about this backtesting story, and I'm trying to figure out what to do next, to be honest with you. Also, it's very important to have more than one. One of the things that I've identified, that seems pretty obvious is there's a lot more. It's real important to have more than one, plan in your playbook. This is the initial balance trades only. Well, after say one or maybe two, there's nothing left to do for the day. So I need to get something to do with VPOC migration, and I'm trying to review any kind of setups that work. And if you certainly have one, speak up, drop something in the chat. That would be super. I'd really appreciate it. That's where I am on the back testing and basically how this is developing. So we'll leave it at that. Do a market recap at the bottom of the hour, and then the market on close orders at the 1450. Boy, we didn't even remotely think about closing that gap. This is suspicious right here. You see how this is a flat bottom? I would suspect we're probably going to trade lower here in the overnight, but never know. It just looks like unfinished business to me, like the auction just quit. Why did the auction quit? Or light volume, that's one thing. We're 70% today. And real small. Look at this, ATR of 3 ticks on a 1 minute candle. Now 1. Okay, call me a liar. Previously in the week, we've been up over 8 or 9 points in a 1 minute candle ATR. So something's up. I don't know what, but something. And okay, there you go. We'll talk about the recap at the bottom of the hour. All right. The bottom of the hour, the final turn. Heading into the cash close at the top of the hour. So every day I kind of try to do a bit of a market recap here. Funny, we're just back to our old friend 45. You know, that level's been around for, Jesus, I forget how long. I've put it on various charts and stuff. We revisited so many times it became almost comical. So what have we done today? Well, after the State of the Union last night and whatever else happened. We gapped up and here we are. Gapped up and drove on, and not really a hard drive, but at least traded up in the direction of the gap. No inclination or even suggestion that they wanted to close that gap today. Took out the IB high over here around first trip out was about 1046. And then there we are. As I said, I was talking about that earlier. There was a signal trade that stopped right here with this joyous occasion. And then the second one, but no trigger, which would have been an IB continuation. Systematically no trigger. It should be real important to understand that Nvidia earnings, the last of the Mag 7, are out today at 15:20, I think. We'll look at that in a minute. So here we are. Notice how small the daily range is here. Very light volume, which we were just looking at a minute ago. And this is, just quickly, in case you're not here in the pre-market, this is Bookmap, where I enter my trading and statistics, etc. IRT charting. These are the micros. This is the micro ES, NQ, ES higher time frame micro composite chart, and the mini market profile. I also plot the same configuration in the minis up here. Look at the different behavior pretty much in the mini and the micro. Some people say they watch the mini and trade the micro, and in my experience that wouldn't work out very well, because oftentimes those levels are off and they're not the same, in my opinion. Maybe it's just my charting, I don't know, but I would not recommend doing that. So back here to the minis, no, the micros. This is IRT again, and you'll notice here in the header of all my charts on IRT is my chart name, which is meaningless to anybody, but there is the instrument, the periodicity, the chart type, and the session. Same for all of them. This is my higher time frame chart, or what we refer to often as the micro composite, for the following reason. It is a day session only, RTH session, and these are daily candlesticks. Wherever price overlaps, I pull this volume profile around them, and that generates a micro composite VPOC, obviously high and low. And then these red and green lines, red and green lines here are the high and low volume nodes within this micro composite, and all they are is just the high and the low of this volume profile. Okay, notice today. Now it's not overlapping anything, so this will not be included in. I will not pull this across to include this bar tonight at the system crossover. These micro composite high and low volume nodes and the session prices up here push automatically to Bookmap right over here. High and low volume nodes, session prices. In Bookmap, this is the full session volume profile, delta for the RTH volume profile, and then this is the high and low. This is the statistic column and the session prices. So let's get back to the market recap here. No inclination to close that gap at all, which is interesting. There's the open. You see that? They tested the open once, twice, and never went below it. Essentially, one tick. You can see that IB low is a little bit below the open, a couple of ticks. You can see it quite clearly over here. Well, there's the IB low. There's the RTH low of the day, and there's the open. So call me a liar for 4 ticks, 29 to 30, right? 4 ticks and a point, isn't there? I think so. All right, so what do we have over here in the snooze department? Well, the news sources that I use are investing.com as my lead source, have for years, because I like the format. They only focus on traditional economic numbers and events. Non-farm payroll, PMI, CDP, GDP, core CPI. You don't see any potential market disruption events like some sort of a political speech or something like that here in this one. You can filter it for whatever you'd like, and also very important, there you can check out what's going to happen tomorrow, next week, this week, and the earnings. Now here is the earnings report, and there's the biggie. And they're going to report this morning or this afternoon after the close. That'll be the last of the Mag 7s. The other news source that I use is Financial Juice, because they do pull in. Oh, I forgot to mention something else important over here. Excuse me. Notice how the event titles turn to a URL when you hover over them. So if you don't know what the CPI is, or core CPI is, you can click that link and it will take you to all about that report, the last, who puts the report out, the last, I don't know how many far back reports it would. Well, let's look. What the hell? There you go. Who puts it out? The last couple of years. Oh, all the way back to January 20. 23, 24, 25, yearly. And it's a pretty comprehensive stuff, and that does not exist on Financial Juice, or at least I don't know where to find those things. Now here's the earnings. It says it's going to be out at 15:20. I don't know. One nice thing about Financial Juice is, for example, Donald Trump's going to say something, have a conference, or a press thing. That, if it's scheduled randomly within the day, they'll try to pull it into this schedule, and that's really, I really appreciate that, because as we all know, those kind of events these days can be serious interruptions to the auction. So it's nice to know they're coming with any kind of advice, because a trader's basic, most primary objective is to protect your account. And the only way to do that, the first and foremost way to do that, is risk management. In other words, limit the amount of risk you expose your account to as best you can. Well, if there's some random thing that's going to drop out of the sky that you don't know anything about, and you have a trade on, and you, even worse, don't have bracket orders in, you could get hammered and lose your whole account. So I really appreciate that. Over on this side is more of a squawk box here, and they will, this is where we'll see the market on close imbalance orders up here at 1450. So there you have that. Shut that off. I hate it when that thing keeps thinking. It just looks to me like it's sucking up space and resources, and I don't like that. So that's pretty much the market on, oh, well, I didn't even pretty much do anything here, did I? Now I'm all, well, we can look down here. We've got the, we don't have, here's U.S. initial jobless claims at 7:30, continued at 7:30. Let's just quickly look at investing.com here. I shut it off a little prematurely. Let's see what's going on tomorrow. Okay, jobless claims at 7:30, and then continuing jobless and a talking Fed. How about the rest of the week? GDP. Ooh, there we go, baby. There's a big one. That's Canada. The PPI, American. Atlanta Fed. That's pretty much it for the week. Okay. So we'll keep an eye out for the market on closing balance over here at 1450. And in the meantime, we'll watch. I hope I had this on the right. Yeah, I did. Okay. Stream window. We'll keep an eye on the market on closing balance right up here and see if they pop it or what happens to it. And that'll take us into 1500, where we will wrap the stream up. Thanks a lot for coming by. Like, subscribe, drop something in the chat, send money, whatever works. My mind is preoccupied on the system and what to do about it, to be honest with you, so I'm not exactly eloquent or articulate here this afternoon. The nagging feeling I have is that the way I make changes to the system, just while we're waiting for 1450 to happen here, the way I make changes to the backtest system is I try to be systematic about it in that, okay, let's say I want to make a change and see if this volume average effort to keep context aligned is any good or not. All right, it's on there now. I run a back test, 500 days, same exact thing we just did a minute ago. Then I changed that one rule or that one element, just one thing, and then run another back test. Is it better or is it worse? Now, I've tried to be systematic about that, and to the point that I even, where'd it go? I even wrong one, sorry. There you go. I even, over here, you'll see where I have the rule and then what change I made. Tried to, keep exact track of it and then note down the changes, positive or negative. I'm trying to be as systematic and method based as I possibly can here to identify this stuff and to focus it in. Ever mindful not to curve fit it. You can optimize the system. This is a little bit complex now to do, I believe. You can optimize the system here, and the best way to optimize the system would be you select a data set for backtesting that's, for example, from the start of the data to the 1st of 2025, and you do the backtests, and then you optimize it, and then you take that optimized data or that optimized system and you run it over new data, which would be from the 1st of 2025 through today, for example, and see how the system performs. That's as close as you can get to a forward walk without doing this, what I've been doing, which is during the live market every day, watch this system trade and then replicate it over here in Bookmap. Simply because if I was confident enough to have the system trade itself on my account, I would have had a pretty good day. Now, not a good day, but a scratch. All told, I would have had a pretty good track record through this past drawdown period And I believe a lot of it has to do with when I see the signal getting over here and implementing it correctly or in a timely manner. And one of the things I know for sure I did was anticipate. So in other words, if I hadn't seen the trigger over here, there's an A and a B. If I hadn't seen the trigger, but I thought it was going to be imminent, jumping the gun. So I think that's part of the problem, but we'll see. And now I'll shut up here and get back to normal where we were. We're going to have that market on, 4 minutes, never mind. And remember, at 320, if Nvidia misses, all hell is gonna break loose, I suppose. I can't imagine that they will. I mean, they're busy just cooking their numbers anyway. You know, these guys start cooking the books from tomorrow morning. They're going to report this afternoon, and at 3:20 and at 3:30, they're going to be working on the books for the next one. So, I believe. This whole round robin cluster that they've got going on with AI is how I know that that's getting past the SEC because of the current SEC and the government. But I mean, think about it. What's a Ponzi scheme? If you rely on new people in to pay profits to existing, that's a Ponzi scheme. And that's exactly what they're doing. Nvidia loans money to ChatGPT to buy Nvidia chips. I'm not sure that, where does it come in? Where does profitability come into it? I don't know. And it's not just me saying this. It's people that are a lot more intelligent in finance than I certainly am. Didn't make sense to me either. I thought, well, that's pretty amazing. Somehow it's fake money, smoke and mirrors. So they're going to keep going up with it right into the close, apparently. And none of these are any kind of signal for me to take. There was this one, which has stopped. Now this kind of puzzles me because if you look at this trade here, this looks like, it didn't. This is only the precursor to the next A. There's the market on close imbalance right there. And that's a little bit more normal. Typically, we used to get quite a bump. That's a bit more normal looking reaction, frankly. Let's see what it says. Wall Street traders positioning for Nvidia earnings. Push stocks higher. So if they're positioning for, here we are. Here's the market on close imbalance. Very small numbers. 271 million, 239 million, 341 million. Mag 7, 100 million. All buy side. Yesterday, these were two. I don't know if I screen captured them or not. There you go. 26 or 2,639,000,000. 1,406,000,000. Substantial numbers. This is just, taking a deep breath, waiting to see what's going to happen at 1520. So if you imagine that positioning for the earnings, okay, does that mean you're getting along in anticipation of good earnings? Why would you be getting long at the top of the market? That makes no sense to me. Here's the day. Wouldn't it have made sense if you thought that the earnings were going to be good to pull this down towards, and they can maneuver these however they want to, drive this down towards the gap close and get long? Because remember, futures trading is a zero-sum game. That means that for every buyer, there's a seller. It's futures. It's a contract. There's no such thing as more buyers than sellers or more sellers than buyers in futures. Different than the liquidity in the order book. Sure, there can be more ask than there are bid. Because these aren't contracts. These are just resting liquidity. If I had enough money, I could put 1,000 over here on the ask. Would that mean anything? Shit, no, it wouldn't mean anything. Except that I had a large enough account to justify or to be allowed margin-wise, etc., to put in that order. What does make a difference is what's actually traded, volume that's actually traded. So remember that the way the market goes up is that aggressive buyers cross the inside market and lift the ask, and the market goes down by aggressive sellers crossing the inside market and hitting the bid. Okay? If I think that, let's start over. All of this is buying, isn't it? Always stop and think who's on the other side of that trade, because there's a counterparty on every one of these trades. Now, how is that counterparty, who is an entity that probably has enough money to absorb or acquire all this inventory, how are they going to get a profit? Manufactured. This is manufactured liquidity, I think. So, I don't know. I'm not to be a conspiracy theorist, but that's a fact. That it is in futures that there is an impossibility to have an imbalance in buyers and sellers. And I don't care whether it's as a hedge or what it is. Anytime a contract is traded, there is a buyer and there is a counterparty. There's a buyer and a seller. That's it. And you'll notice that the market goes down to go up and goes up to go down and goes down to go up and goes up to go down and goes down to go up and goes... Now, what? Why does it do that? Because these guys... goes down to go up to go down to go up, Why does it do that? Because these guys over here, all of these buyers that have been coming across here and lifting the ask, these people are sitting up here selling to them. What are they doing? Well, they're taking on short inventory. And how will they make a profit? By taking this market down and washing out all these stops, creating that liquidity, and getting better prices. That's, if you had 1 million contracts to buy or 100,000, if you put that order in over here, the price would go zooming up and you'd have a terrible position. Or, a VWAP. But if you take the market up and then you blast it down by hitting all these stops, you can get that liquidity that you need. Typically that always happens at the first few minutes of the day. But with this liquidity, just stop and ask yourself the question, okay, what earnings type do you think traders would be positioning for with Nvidia taking this day, gap up and run up? What do you suppose it would be? I'm asking a genuine question. I'm not making a statement. So we're going to shut this mess down in 3.5 minutes. Remember, every trading day at 8 o'clock in the morning, please join Risk Neutral Trading and me for my pre-market setup, both software, stuff, and do the statistics and the levels and set up the bracket orders and all of that configuration, and analyze what I suspect will happen with the open at the open, and then trade live and continuously from 8:30 in the morning or from 8 o'clock in the morning through 1500, so that there aren't to maintain my commitment that there is absolutely no trade taken off the stream, and that this is live trading with my AMP account. What else can I say? There you have it. There you have it. And about 2 minutes to the close. Now, that doesn't mean we don't. This is the cash close at 1500. The market will continue to trade until 1600. So that means then that Nvidia release is going to happen in the last short strokes of the market. And I really don't understand what that would be. Bitcoin, those guys are taking a freaking bath. Imagine that. Well, we've got 30 seconds till this cash market closes, and then bingo, bango, bongo. And the Nvidia extravaganza is going to be 20 past the hour, apparently. I might let the stream just run through Nvidia and see what happens, see what the reaction to those earnings are, just out of curiosity. It might be kind of fun for a unique thing to do. I used to start the stream about an hour early for non-farm payroll when it was still being, put out timely and somewhat accurately. So there we are. There's the cash close. Ringy-dingy-dingy. I forget about these buttons on my mixer. Anyway, there is the cash market. I'm not going to be, wouldn't be thinking of any trades at this point. But I will do a couple of things. First of all, I will be damn sure that trade control panel is off and this thing's not putting on trades I'm not aware of somehow. And I think I'll let this run here until we see what happens with Nvidia. I mean, I let the systems run until 1600 every day. I'm talking about the stream. So there you are. Remember that I'll be back at 8 o'clock in the morning. I'm going to let this go today and see what happens with Nvidia earnings, just out of curiosity. But I'll be standing by with muted mic. So have a good one. See you tomorrow at 8, otherwise, normally. Well, I think I'll put this on the We'll Watch IRT and Bookmap and see just exactly we'll be able to tell the split second that Nvidia number drops. Scheduled at 15:20, so. In the meantime, I'm going to be pretty disappointed about the trading here, or I should say the lack of it. I'd like to know what that big extravaganza right there was, which is right here, other than just a straight up stop run. 770 stops got clobbered right there. That's how they do it. They manipulate liquidity or manufacture liquidity. So let's think through that. We're waiting here. If you've got a big bunch of orders you want to buy in anticipation of the market going up on some big thing like maybe Nvidia earnings, but you don't want to put that big order in the market, which would force your average settlement price much higher, what could you do? So you got them long, you got them long, you got them long. And how does the stop work on a long? The stop is they're selling the long at a price down here. So you bring the market down here and hit all these stops, and you've got all this 770 contracts worth of inventory at 46.5 instead of, say, for example, 52 or some, 10 points, I guess. That's how it's been explained to me by those who are more experienced in that than I am at those institutional levels. That's the essential reason for the stop sweeps, liquidity grabs. I have to stop and piece that together mentally because obviously I don't trade in that realm, And I'm keeping the stream up just for the Nvidia earnings. Just thought it would be interesting. Be sure I'm off here, so that's not going to be a problem. Should be 4 minutes according to the and I can promise you that you're going to see it. I would suppose there's going to be a pretty big reaction over here, I suppose. Let's check and see. We got 4 minutes to wait. That's not exactly a big deal. I let this, as I mentioned earlier, I let the stream and all my my machines continue every day until 1600 for the full session. But I typically take the stream down at 1500. You know, I figure 7 hours is enough. And so this is no sweat, no strain. Nothing different other than the mic is going somewhere and OBS is still recording and streaming it up. So if you were a clever boy or girl and you got, you picked up 700 contracts down here at the 775, or better yet, down to the 5s, maybe the 50s, wouldn't that be see what kind of a pop you get? There's a good clip of David Paul, the mentor and close friend of Tom the Trader and Trader Tom, or whatever his name is, the Best Loser Wins guy, and several other people. There's a good clip of him explaining that to an audience of people and traders. I need to run it on this machine so I can grab it and copy it, and then I'll stream it again or something. I don't think it would be copyright or anything. Well, I've got about a minute according to this. According to the rule, I don't know where Financial Juice came up with 1520 for the number. I'm assuming that it's been put out by Nvidia, but I don't have any idea. That's what I'm going on. That's my story, and I'm sticking to it, boys and girls. Well, 30 seconds if it's the case. Now, liquidity has pretty much dried up. We're down to the onesies and twosies over here, 3s and 6s. So the book is thinning out big time. I'd say it's probably getting close then. At 15 seconds. Look at how the price has just narrowed in. Lower highs, higher lows. 10 seconds. I think it'd be pretty funny if they came out with a huge miss. There we go. There's the 20, and I don't see anything. Now, newsreaders are going to need to plow through that, and who knows if it's accurate, if that time was accurate. Interesting that it's right at settlement, huh? And that's about a nothing burger. If that was it, let's see. Oh, no wonder I don't pay attention to them. They're still claiming 1520. You know something I don't know? Yeah, well, stand by. Yeah, I don't see any earnings here. I don't see any reaction over here. And I see the clock down here. So, by the way, just as an aside, since I'm standing here talking on the stream, notice that I always stream the entire monitor, not just the application. So you can always see any applications that are open. You can see the computer clock in terms of hours, minutes, seconds, and the date. Tie that back to Bookmap. Just another piece of accountability that you don't find often. Huh. Well, I have no clue what they're doing here, but what I do know is that they're not doing anything much. No numbers out yet, even on even over here. So we'll just stand by. If it comes out and it's worth looking at, great. And if not, or I don't get it, or something happens, I don't know. What my thinking was is that perhaps they've got their times off. Beats the hell out of me. Beats the hell right out of me. There's nothing going on here. Look at this. Look at this market. Now, granted, it's typical for, you know, the short strokes at until 1600. And I'll be the first to tell you that I don't know enough. I don't follow earnings closely enough to know if this is just a glaring mistake and it should be 1620, you know, which would be in the break between the two sessions. That'd be more, that'd make more sense to me, but Salesforce. I didn't even see this. Wow. Do you see this little goodie over here? Trump is gathering tech executives from companies such as Amazon, Meta, and Microsoft, Alphabet, next week to the White House, where they will sign pledges promising their companies will pay all the electric bill for energy-intensive data centers. Yeah. And, you know, checks in the mail and Santa's real and a couple other euphemisms I won't mention here in mixed company. So I don't know. I'm assuming that this is not going to happen until perhaps, according to this, you know, it's up there, but we'll see. We will see what we will see. I was expecting some big fireworks. I'm disappointed now. Go take a nap. Go for a walk. Wasted 30 minutes. I suppose if I wanted to be real diligent about it, I could Google when they were going to release it. What I'm thinking here is that there's a problem with the time on Financial Juice. They do things that way sometimes. It's the time's off. But that doesn't really make sense either, because if it were 1620, that wouldn't ring out because that's Mountain Standard and Nvidia's in California. So if it were supposed to be Pacific, then it would be probably be a different story. Something's going on here, though. Looking to bounce around there. Now, remember that these are some pretty good swings, right? The book's still typical for this time of day. Well, I was hoping on some big fireworks episode here, but nothing. I think that's about the same conclusion that's going to happen with AI too. Nothing. Well, they're going to run out of market here in 32 minutes. So at 1600, the data's going down and sessions will switch. So maybe that was my suspicion, that they just have that timing wrong. The new, this new format I don't like at all. There's all kind of blanked out crap going on over here. I don't know what that's supposed to mean and why the times aren't there. I'm not paying for it. Oh, here we go. Who cares? Well, doesn't look like any wonderful thing's going to happen here, and it's 15:30, so there you are. I'll leave the stream on until 1600 and then shut everything down at once like normal. But it's about a non-event. Boo, hiss, boo. There you have it, and it was a hit. So it was at 31. What did they pop it? 87, 58, 30 handles. So there's the. There it is. What's going on here? Okay. big lag, huge pile of data coming down the pipe. Everything's behind the curve here. There's a big spike up here, which is not happening. There's 36 seconds delay here, so for some reason Bookmap can multi-thread and doesn't have that problem. Took out 450 stops up here at 82s. It's going to be a while for IRT gets its shit together. That's apparently, that seems pretty obvious. Wow. One hell of a pile of data. I'm not usually ever streaming or doing anything at this time. So this is interesting. But there's the pop for Nvidia. Isn't holding very well. However, now be advised, this is 10 handles. Like anybody expected that they were not going to have a miss. They've been cooking these numbers since Christ was a kid, There's a spike. Nothing happening over here yet. Still way behind calculation-wise. Or was it 69.88? Yeah, it is. That is the high. That was the pipe. That was the pop. And then down here we go. It's pretty interesting. And lags are none now, so they got tied up pretty quick. What happened over here? This must be kind of cute. Oh, there's Nvidia. Look at that. This is exactly why you don't hold a position into a number or a earnings release. Imagine that if you were positioned the wrong way. How would you manage that risk? Impossible. Completely impossible. Even if you had stops one way or another, it went whistling by there like, meaningless. Not that, but certainly better than not. So all those people that ran these stops down here and got 700 contracts at 46s are up here in the 80s. That's pretty good. That's a pretty good run on your money, huh? And that's the kind of thing that gambler traders would love to do. I would love to do that too, but I'm not going to gamble with my account. That's like the people that try to pass prop firms, or used to, with prop accounts, or whatever you call them, combines or challenges or whatever. Well, like non-farm payroll, they'd put an order on either side of the market, and if it hit, that was their profit target. This is before the consistency rules. That's why the prop outfits put in the consistency rules. You got to trade it more than one day at a whack and all that. There's a whole bunch of people, and if it went in your face the wrong way, you just so what? You just, whatever they call it, renew or, pay it again. That's all there's to it. There was even videos on YouTube about it. Well, there you go. That was a pretty interesting event, and I am going to now pull the stream down because that's pretty much over, near as I can tell. And have a great one. I'll be back at 8 o'clock in the morning. Thanks very much.